we're studying measuring economic performance, and that studies three economic variables: gross domestic product, inflation, and unemployment. And we're focusing on gross domestic product now, the final market value of all goods and services produced in a period of time. Now, when you spend money, some of the money you spend will represent purchases of goods and services that have value in a period of time, for example, a year. But some of the money you spend or earn does not represent this, and so will need to be excluded from GDP. So as an economist, we need to know what transactions occurring will be included in GDP that we need to measure and which will not. We've also learned from the notes that there are two methods of measuring gross domestic product. There's the expense approach, when you spend money, and the income approach, where you earn money. If you spend $1, someone else is catching that dollar as income. So these approaches will be the same. So let's look at some examples and see if we can apply these concepts which we've learned from the notes to specific examples. So for each example, we want to know if it's included or excluded. If it's included in the expense approach, is it included in consumer spending, I sub G, gross private domestic investment, which is business spending, government spending, or exports or imports, or if it's not included in GDP. You spend $7 to attend a movie, so that is included in consumption. Consumption includes expenses on goods as well as services. Goods are tangible things of value that give satisfaction. Services are intangible things of value that give satisfaction. When we say value, it means you have to pay for them. All right. A family pays a contractor $100,000 built for a home built this year. So that would be included. But in a surprising way, as we learn from the notes, that is included in business investment. The reason for that is you may be tempted to count it as a consumer good. It's a tangible thing of value that gives satisfaction, someplace for you to keep your stuff and sleep at night. The government considers it an investment because theoretically you could rent it out and make income from it. The fact that you don't is an opportunity cost. So the government classifies it as business spending. A family pays $75,000 for a house built for them 3 years ago. That's a second-hand sale, and that will be excluded from GDP. It was included 3 years ago when it was first built. So that is NC, not counted. An accountant pays a tailor $175 to sew a suit for her. Now, you may think that that is an investment in your future, but to an economist, the fact that the suit is being made for her personally makes it a consumer good, a service. The government increases its defense expenditures by $1 billion. That is included in GDP in government. The four components of GDP on the expense approach are consumer spending, business spending, government spending, and imports and exports, net exports. That's government spending. The government makes a $300 security payment to a retired person. This is a public transfer payment and is excluded from GDP, not counted. You buy General Motors stock for $1,000 in the stock market. You have made a tremendous financial mistake because General Motors stock is not worth $1,000 a share. Oh, well, maybe that's in total. Okay, so that is not counted because that is a financial transaction. You're transferring ownership of a publicly traded company, but nothing new has actually been produced. At the end of the year, a flour milling firm finds that its inventories of grain and flour are $10,000 above its inventories at the beginning of the year. That's counted in business spending. And it really should be sub G. It stands for gross private domestic investment. Gross for total business spending. I for investment, purchasing assets. Gross private, private meaning not the public investment. All right. So that's added to inventory. And there's a trick to this, which we'll talk about in the notes. A homeowner works hard caring for her spouse and 2 children. that is not counted because there is no monetary value for that. If the homemaker instead hired a maid to do that, that would be counted. But since she's doing it herself, there's no monetary value attached to this. And so, although it is an important service that is provided, since there is no monetary value, it is excluded. Ford Motor Company buys new automaking equipment, and that would be included in business spending, I sub G. You pay $300 a month to rent an apartment. That is a service, so you will include that in consumer spending. Apple Computer Company builds a new factory in the United States. That is business spending, I sub G. R.J. Reynolds buys control of Nabisco. This was a famous takeover that happened in the 80s, a hostile takeover, and it made a lot of press, but is a financial transaction, and as a result is excluded. Nothing new was produced. It was just one company trying to buy another company. It was a transfer of ownership. You buy a new Toyota that was made in Japan. Now, that is included in net exports. That, although a new, okay, this is a negative to our GDP. We get the good, but they get the income. So this is part of the trade deficit that we are currently experiencing. We get the good, which is good, but they get the money. So since they get the money, it's a negative to our GDP. You pay tuition to go to college. That you may consider that an investment in your future, but to an economist, you're paying for an intangible thing of value. That is a consumer good, a service. So in this handout, we explored gross domestic product more specifically than in the prior handout. And here we discovered that the expense approach for GDP has four components: consumer spending, business spending, government spending, and net exports. But there are some transactions that are not included because they don't represent the production of new goods and services. And there are some transactions in the income approach that don't represent income from an earned income, a factor of production, a transfer payment, for example, and they will be excluded. So this was practice in calculating what transactions to include gross domestic product.